This.
Hi, everybody. Well, welcome to the Options Pro webinar here, guys. We're planning on handing you guys some insights into trading and some of the stuff we look for and we teach in our class. First of all, let me start off with I'm Z, DM Trades. I've been posted a free game plan for the last 2 years or so. I started trading back in January of 2018 when I took the stock market live class. I've been trading with Umar and them for the last 2 years or so. Trading, as you guys know yourselves, is not a easy as 1, 2, 3. You know, there's changes, there's strategies you have to follow, rules you have to follow, and the more you are focusing on your strategies and your rules, the more successful you will be. I've been training with MedShare for the last 2 years, to read for the last year or so, and we have something great planned for you guys.
Yeah, absolutely. All right, guys. So let me share my screen here too. So Z, if you could let me share my screen. Guys, my name is Mitch. I am from Toronto, Canada. I've been trading for about 3 years now, and my journey began, as well, taking stock market labs. So, like Z and I, and like, many of you, I'm sure, have taken some sort of educational course, right? That's where it all starts. It starts with an education. You need to understand the basics. You need to learn the basics. You need to learn how to use them. You need to learn how to kind of go about getting into the market, right? So I started with Stock Market Labs, spent about 1 year or so learning through Umar and Usman and a bunch of great traders. And then I left and began my own, creating my own course, where I basically summed up mainly what all of my losses were and all of my lessons. All of my, what worked and what didn't. And I wanted to kind of share that and fast track that for a lot of people, because thankfully I came from, I had an account that could handle taking drawdowns. I was young enough, I could handle that, but I knew that there are people out there that, if they have that drawdown, they're maybe done. They walk away from the market. So I wanted to be that person that could really share that and not just share the basics, but really share, hey, I lost $5,000 doing this trade. I want to share that so you don't lose any dollars doing that trade, right? This is how I made money. So I started a group called Cipriani Capital, which you guys may or may not have seen. It was only around for a short period last year, and then that's when I actually started working with Z. So Z and I started working on this. Option Pro, and this has been amazing. This is something I'm very passionate about, guys. I like helping. That's something that in trading, it's a very selfish, it's a very kind of lonely profession, if you want to call it that. You're at home or at your office and you're working, but everything is about yourself. What you make, what you lose is your money, right? But having a group like this, guys, is what I'm very passionate about. It's what I do webinars every morning. I connect with our people. I do, unlimited amount of webinars for everybody, because that's what it's about for me, is helping other people, right? Making money is part of it, but at the end of the day, if all you do is make money, you'll be a little bit lonely, okay? So the plan for today, guys, is just to be a quick, free webinar, okay? It's not our full exclusive course. That is about 20 hours of teaching, okay? We are just gonna kind of cherry pick some of the top topics that we want to discuss. We want to talk about technical analysis. We want to talk about options, mainly how to select the right option strike, all of those things, expiration date, what is the volume, what is the open interest, okay? Talk about that kind of stuff. We're going to talk about some technical analysis. We're going to talk a few patterns, and then I want to touch a little bit about journaling, guys. Journaling is so crucial, okay?
You're trading.
Yeah, it's so
staying green, man.
Okay, so that is the plan for today, guys. We're going to run it probably till about 6:30, okay, an hour and a half. Then we'll open it up with some questions. Okay, so if you have questions, you can feel free to stop along the way and ask. you can ask just by writing in the chat if you want, okay? So feel free to ask questions along the way. If it's a larger question or off topic, feel free to save it for the end.
Hey, Tariq.
Hey, what's going on, beautiful?
How you doing, sunshine?
I made it, baby.
Introduce yourself, bro.
So, my name is Tariq Abdurrahman. I've been trading for about 5 years, and I love trading. I love the challenges that it offers. It's definitely has been a difficult journey to get where I am today. One of the reasons that I do love trading is it allows you to choose what you want to do with your day. Yeah, and that's like the main biggest thing for me is being able to choose what I want to do with my day while also trying to build wealth. I mean, I believe that everybody should understand how money works and how to build wealth. No matter what your main interest is, whether it's, you know, or being an artist or painting or whatever it might be, having that skill set of trading or investing and having that mindset will help you focus more on the things that you truly love. And I don't think I'm ever gonna give up trading. It's been a wild ride. It definitely had some bumps, but yeah, I love it.
And I love you, bro. I love you. All right, let's get this party started, guys. Now for people that are just starting out in trading and haven't had any training or stuff like that, and are still working, right? Please focus on learning, not quitting your job.
Yeah.
Just say that right now. You know, a lot of traders that are starting out are so focused on quitting their job, they take stupid trades and end up, you know, back in the job right away. So please, guys, here are a few things we stare at when we're trading. So please focus here. All right, Mitch.
All right, guys. So actually, before we jump into this real quick, I want to share a few helpful websites, all right? Just very quick. And I'm going to, you know, I use these a lot for research. So you guys can take a quick look here. First one is going to be FinViz, guys. Okay, you can see it up here. Super, super helpful. You can use screeners on it. Okay, so you can play around with these kind of however you want. So, you know, there's just so many good things you can do here. Sometimes, you know, I will look for, you know, companies trading at a low PE if I'm looking to make investments, and I want something that is, you know, a value kind of play. And it doesn't mean, hey, the lowest one I'm going to buy. It just allows you to kind of be organized. You can do technical here, you know, on a low RSI under 20, you can, is a stock trading, you know, 30% below its SMA? Okay. You know, is there a reason why? Does that give you an opportunity? You know, and then overall, guys, as well, you know, I'll share one that I found on here, Airbnb. Something that I really use this for, guys, is to check the short float. Okay, so short float, guys, again, this is not going to be a stock trading class. This is going to be talking about options. However, short float essentially tells you how many of the outstanding shares are sold short. So just for easement's sake, Airbnb has 100 outstanding shares. 23 of them have been sold short. Okay. Now that is a pretty high amount. Usually, you know, if we're talking, especially for large companies at about $100 billion. So let's say AMD, for example, I know different industries, I get it. AMD also 100 billion. You know, they're trading around 6, which that's even a little bit high, to be honest. What's another one? You know, maybe NVIDIA is a lot bigger. Okay, NVIDIA at 300, but you know, usually, guys, for options, what we're trading is usually in the range of 1 to 2%. So, you know, again, FinViz is very helpful to understand the short float. It helps you understand what is the sentiment on the stock. Why are there so many people? I was asking this in the group yesterday or 2 days ago. Guys, why are there so, I can't understand this, why there are so many people bearish on Airbnb. Now there's, you know, if you guys have been around for a little while, at least the start of the year, you saw what happened with AMC and GME, right? Basically what had happened is the people shorting it got way too, aggressive. They shorted too much. Then the market said, hey, we see an opportunity to expose that. And so, this is what we call a short squeeze, guys. You can see how this one's highlighted red, that usually over 15 to 20% is almost like what I kind of think in my head is like, it's a stock that's, soaked in gasoline. And it is, once there's a match, AKA usually a catalyst, that's when you have the potential for a short squeeze. Okay, so if you're trying to trade Airbnb next Monday, tomorrow, saying, oh, we're going to short squeeze it. No, wait for a catalyst, right? Wait for that match to happen. Okay, the ride can stay soaked in gas for a long time until it is ignited, right? So, but this is a very helpful tool, guys. You can see a lot about the sales, the income. You can see that all of the analysts here, okay? You can see all of the news, right? Pretty up to date too. May 2nd, right? So you see a lot of the news and you can see usually what insiders are doing, but it seems like they don't have it on this one. But anyways, guys, great website here. Write this one down. Next one, Econo Day. Very, very helpful, guys. We go through this every morning with our students, and we look for the economic calendar for the day. Okay, so the legend for this is going to be down here. Red is give it extra, red is market moving. Okay, it's very significant. Pay attention to it. Green, give it a little bit of attention, not as crucial, but so it allows you to kind of, what I say here, guys, is it's your traffic. Okay, you're allowing yourself to see traffic ahead of time, right? If you're driving down the road, hey, there's an accident ahead. Maybe you pull off the road and you go around it. Okay, if you know that there's stuff coming here at 10 a.m. tomorrow, pull out of your position before 10 a.m. Avoid hitting that roadblock, and then you can get back onto the road, aka get back into the trade once it's all clear, right? So this is something that is very helpful, guys. So please, keep an eye on both of these. Okay, let's get into the content. All right, what options? What are options? First, I want to kind of know, I'm not sure if there's a good way to do this or not. How many of you here have option experience? Like, type in the group. I just want to see, hopefully I see a lot of me's, raise your hand. Yeah, raise your hand. A lot of you guys, the majority of you guys, hopefully. Wow, a lot. Good. Yes, beginner. Good, guys. This is gonna be great for beginners. Awesome. Okay. So guys, what are options? First off and foremost, okay? Options are a contract between a buyer and a seller. Okay. Now, there's a wordy definition to it all, okay? But that's not really my style of teaching. I'm not a university professor. It is a contract between a buyer and a seller. Okay, now the buyer, okay, has the choice to exercise that option or not. Okay, now the seller does not have a choice. The seller has the obligation. They have to uphold the option agreement based on what the buyer decides. Okay, so if I'm the buyer and Z is the seller, I dictate what happens. It's not Z who dictates what happens. If I exercise that contract, he can't walk away, right? But I can walk away from it. Z can't tell me what to do. The seller cannot tell the buyer what to do. The buyer can tell the seller what to do. Okay, so the buyer has control. Okay, that's very important to understand how that works. Now, the trade revolves around what we call a premium guys, okay, which is made up of several moving parts, okay? So we're gonna dive into this and what those moving parts are and whatnot. And then this is our option chain, guys. This is, more or less what it looks like. Let me pull it over here, right? So this is our option chain. We can play around. We can, you can have all of the strikes if you want. It's going to be too many. We can have, if I pull this down more, we could have more. But you have your strikes. So you have your calls, your puts. We're going to talk about those. This is the option chain. Okay, this is where all of the options are. Different expiration dates. You see this, guys? May 7th, May 14th, 21st, et cetera, et cetera. This gives us our expiration date. So these are our expirations. These are our strike prices. And then lastly, these are our premiums. These are what we trade. Okay. At the end of the day, that is the money that goes out and comes in, and that is what we are trading. Okay. Why options versus equity? Okay, so to start off, guys, I started trading equity. Okay, so my journey was I started off in commercial real estate. Okay, and I had a friend of mine at work who was kind of trading some penny stocks, and I was like, you know what, let me give it a shot. So I started, and you know, the one thing that I noticed about having to trade equity was that there was always a new stock. There was always this one's moving on that news. There's the FDA approval. There's this new drug, and there's that, and there's always something new. You always have to stay up to date, and you have to find the next moving stock. And then the same catalyst would not impact the other stock, and it was you know a little bit draining. So then I started trading blue chip stocks with just stock, right? Now the problem with that, what I really liked about that was the consistency side of it. What I did not like is the leverage side of it. If you can only buy, you know, let's say $10,000 worth of Apple stock, you know, you maybe get what, 100 shares. If the stock goes up 50 cents, you're going to make 50 bucks, right? You're not going to make a ton of money. So I was like, you know what, this is not worth it. I need to find a way to get leverage, right? And I did not want to touch margin at that time. So I needed to find a way to create leverage for myself. And that's where options come into play. Okay.
Same here. I mean, when I first started with stocks, you know, I had an account like $2,000, $3,000 account, and I was trading stocks at like $10 and stuff like that. You know, doing whatever it was, you know, $50 a day. I was like, man, I'm never gonna, you know, make anything here, right? So I started to doing options right away, but like I think it was like 3 months into trading. I was like, you know what? Let me do this one. And my first fucking trade, my first trade, I got lucky on a Bank of America where I turned like $300 into like $3,000 out of nowhere. You know, so options is a great way to grow a small account if you have control.
Yes. Yeah, that's the key. You have to have control of what you're doing. So leverage, guys, each option, whether it's a call or a put, represents 100 shares. Okay, so this allows you to control a lot more size. Okay, so you may put $200 into an option, but now you're controlling 100 shares of Apple, which would cost you 10, 12 grand, right? 13 grand, I believe, right now, actually, where the stock's trading. So you're now controlling $13,000 worth of shares with your $200 option. Okay, that's the leverage. Okay, the stock goes up 5%, you're going to go up a lot. Okay, you make a lot on your money. Okay, great for those without margin accounts. Okay, so I know that I'm in Canada, guys, we do not have PDT. In the States, I know you guys have PDT. You have cash and margin accounts. So this is good if you don't have access to margin. This is a very efficient way to create leverage for yourself. Okay. Now, another thing, guys, when you use margin, you pay an interest rate on the money you borrow. Okay. Options, your leverage is free. Your leverage, you're not paying an interest rate on it. Okay. So that's very significant, guys. You're basically allowing yourself free leverage. Very, very crucial. And guys, this is one thing that, is very important is, learn how to trade and then leverage it. Okay. You need to learn how to do a skill and then leverage the shit out of it. Okay. Whatever you're good at, you're good at cutting grass, figure out how to cut 100 lawns in a day, leverage it however you can. Okay. You're good at trading, leverage it. You're good at real estate, borrow money, right? That is how wealth is created, guys. You have to leverage your money in a world where we have almost zero interest rates. Leverage your money. Okay. And I'm not saying be crazy, go into debt, all that stuff. No, that's learn first and then leverage. Okay. It's just like buying a house, guys. You don't have to buy the house cash, right? You use leverage. You put down 20, the bank lets you purchase a house, where you don't even own all of it, but you still, if that house goes up 100%, you're still participating in that, right? So very important. Another reason why I love this, guys, I kind of already talked about this, but I like trading a consistent watch list every day. Okay. I don't have to wake up every day scrambling. What stock am I going to trade? What is moving? What's that news? Who's getting FDA approval? What's going on here, there, and the other? I like, trading options is more of a calm way for me. I wake up, I have my set watch list. I have levels. I understand how these stocks move because I trade them every day. right? Imagine dealing with a client at work. You have to, instead of dealing with a new client every day, you get that same client every, other day, right? Tesla's in play every other day. So you get to trade something that you're familiar with, you're comfortable with, you know how it works, you know how to treat that client, you know how to treat the stock, you know what they, you have expectations of how it will react. And it's, becomes almost second nature, guys. So that is something that becomes very important to me. And kind of round trip, guys, gives me confidence. Okay. I'm confident trading something that I trade every day for weeks, months on end, right? By the end of it, I know exactly where Tesla's going to go. I know I'm not predicting it, but I know that how it moves, right? So that is very important with trading options, guys.
I've traded, 90% of my trades have been the same trade. Apple, AMD, SPY, Tesla, I rarely add something new and just trade it,
Yeah.
I gotta know, how do the premiums move? How do the pullbacks hold? So trading some random stocks is not the way.
Yeah, usually whenever I trade a name that's not on my watch list, that's randomly moving, the most part, it's a donation to the market, and it just reiterates my reason for sticking to my watch list, getting comfortable with names, and just, again, learning. For me, guys, it's all about learning. I'm forever a student of the market. I'm always trying to learn, always trying to improve, and then trying to leverage what I'm learning. I learned this, I want to leverage it, that is what I'm always after. Okay, guys, so we have types of options, okay? They're broken up into call options and put options, okay? Just like a market, for the most part, is gonna go up or down, right? If the market doesn't go up, it's likely to go down. So if you're not trading calls, you're gonna trade your puts. Calls is making a bet that the stock will rise, okay? Think of it essentially as long a stock, okay? You buy the stock at 1, you wanna sell it at 2, okay? Calls is basically you want to participate in that move up. Puts is, think of it like shorting a stock, okay? You're making a bet that the stock will drop. Okay, so these are basically our two directional trades, you have calls and puts. Now, term, guys, these are very important. We're gonna talk more about expiration date, but term, okay? Generally speaking, okay, there's no sets, has to be this, has to be that, but short-term options are gonna be 1 week to 3 weeks of expiration, okay? This gives you 3 weeks of holding until that contract is done. Medium term is going to be anywhere between 4 and 12 weeks. Okay, so 1 month to 3 months. That gives you some holding power. That doesn't mean a red candle is going to ruin your day. It doesn't mean a red day is going to ruin your whole trade. You can hold this for a few days, few weeks, more or less you're okay. Okay, as long as you're making the right decision. Now, a long term, again, three months onwards. Some, I've taken option trades where I hold them, where I buy 2 years out, right? And those, we're going to talk about those. Those are called leaps. But understanding your term, guys, is very important. This is all about setting your expectations, right? Too many people, they want to enter short-term trades, and then it doesn't go their way. So then they're like, oh, let me hold it for a long term now. Let me buy this Tesla did. Oh, it didn't work. Well, I guess I'm swing trading it. I guess I'm holding this. I guess, you know what I mean? So it's very good to understand right from the get-go what your term is. How long do you want to hold it? Okay. All right, guys, here is, a little bit of breaking down the premium. Okay. As we said, this is what we trade. Okay. I like to think of the premium like a math equation. Okay. So the math equation is basically here. Okay. This is our left side, okay? Our left side over here is like a math equation. We have several inputs, okay, that give you a single output on the right, okay? So if we walk through them here, guys, stock, self-explanatory. However, every stock has different options. So if we keep all of these the same and we change this from Apple to Tesla, completely different option price now. We change this from Apple to Microsoft, completely different, okay? So every time you change the stock, you are essentially, changing the entire calculation of what this premium will be, okay? Expiration date, okay? This is when the contract expires, okay? Typically, guys, this is every Friday. Occasionally, a stock will only have a monthly expiration, okay? So I'll show you. here is Tesla. So this upcoming Friday will be May 7th. Add 7 days to that will be May 21st or 14th. Add 7 days. You know, you can even see in the brackets here, guys, 5, 12, 19. Now, who is this? Coinbase was one. I can't think of any off the top of my head that have only monthly expirations because they're far and few in between. But occasionally you'll come across a stock that, okay, ARKG, you know, let's take a look at ARKG. This may only have monthly, okay? You guys see this? These are the monthly strikes, May, June, okay, July, so on and so forth. All right. So, but for the most part, guys, our expirations are every Friday. Okay. Now, again, if you change this part of your calculation, if you change this part of the math equation, you will change the premium. Okay. If you change this from December 17th to January 17th, you're going to have a different premium. Okay. Next up is our strike price. This is where the contract, exercise takes place. Okay. So at the start, I talked about an option contract is an agreement between two parties, a buyer and a seller, and the buyer has the right to exercise that contract. Now, if that buyer wants to exercise the contract, they will do so at $70. It's set out before the contract is even purchased. That is where that exercise will take place. Okay. And again, you keep the stock the same, you keep the expiration the same, change the strike price. Again, you're going to change your premium. Okay. And then lastly here, guys, call or put. Remember, call is if we want the market to go up, we're going to trade calls. If we want the market to drop, we are going to trade puts. Okay. It's very important to understand how to play both sides of the market. Okay. I know a lot of people, the whole, diamond hand, the market only goes up. Okay. Maybe if you're holding stock, if you're holding options, guys, you will get smoked, right? You need to be able to trade both directions. If you only know how to play calls, you're going to have a very tough time trading the market. Right? So make sure we know how to play both of these. Last but not least here, guys, if you change anything on the left side here, anything at all, you will change your premium. This will move up and down. Okay. Now, as I said at the start, guys, each contract is worth 100 or controls 100 shares. So you have to multiply this by 100. Okay. So that is not a there's the one. That is not a $3 trade. Okay. That is a $300 trade. Okay, if this was 30, that would not be a $30 trade. That would be a $3,000 trade. Okay, so whenever you see the premium, it's going to look like that, like $3. You need to know in your head that, hey, this is going to cost me 300. Okay, not 3. Very, some people get confused at that. I don't even really know why they do that, to be honest. They could probably just show it in an easier way, but they don't. But at the end of the day, that's what it is. You just need to make sure you understand that these are times 100. Make sure you understand your position size. I've seen before people think that these are $3, they'll buy like 100. And then they'll be like, what the hell? I am in way too many contracts here. You need to understand that that is 310. All right. So here, I want to quickly talk about the outcomes to an option trade. Okay. To me, it's very important to be aware of all 4 directions that this option trade can go. If you know all of the outcomes that entry is going to leave you with, then you should be a little bit confident at what's going on. You should at least know, okay, I know there should be no outcome here that surprises me. I'm either going to exercise this option, I'm going to let the option expire worthless, I will exit the option early for a profit, or I will exit the option early for a loss. There is no other scenario here. You have 4 scenarios, okay? Make sure you know all of them. Make sure you're confident. Make sure you understand where you're at, what you're going for. Are you trying to exercise options? Are you trying, hopefully not, to let them expire worthless? Are you, mostly for the most part, guys, where we want to be is number 3, right? We aim to be at number 3. We accept number 4, right? I do not accept number 2. You should never let your option go worthless, right? If you're wrong, salvage whatever you can. It's $10. That's a lunch. Salvage your money, dude. You might as well, right? Okay, so here is an example, guys. And one way that I really like to teach is by simplifying things, especially for people who are new to the market. You may not understand all of the language and the lingo that goes into options, okay? It's kind of complex, but one thing that we all, for the most part, understand is housing, right? We live in our houses, we understand how they work, all of that. So I want to just kind of simplify this, guys, how options work, and just change it from stocks to house. Okay, so you can at least understand our outcomes. All right. So, due to my research, I think, hey, the housing market is about to go up. Okay, so what am I going to play? Calls, right? Why calls? I'm making a directional bet that the stock is going to rise. Okay, so calls. I purchased a call option for $10,000 from Z. I'm the buyer. I have the control. I can choose to exercise or to not exercise, but I have control. Z is the seller. And I want to buy Z's house for $1 million. Okay, that right there is where that contract will, that option will take place. That's the strike price. Okay, and the contract will expire in 12 months time. That is my expiration. Okay, so we went through everything. On the left side of our equation, we have our calls, we have our strike price, we have the stock is the house, and we have our expiration. Okay, all of that leads me to a $10,000 premium. Okay, so scenario one is I exercise this. Okay, so after 12 months, right, we're here at expiration. The house is now worth 1.1 million, and I purchased the house for $1,010,000, which is my strike price plus my premium. Now I'm sitting at a profit of $90,000. Okay, but now I own the house. Unfortunately, whether I want to or not, maybe I already own a house. I now own that house. Okay, so I need to take care of it. I need to pay the bills, yada, yada, yada. Okay, but now you're on the hook for buying that house. Okay, so now you're sitting in a profit. Scenario two, letting the option expire worthless. This is where you never want to be as a trader. Okay, after 12 months, the housing market doesn't budge, right? That house was worth 900,000. It's still worth 900,000. And it would not make sense to buy the house at the strike price of $1 million. So you'd be paying over market price. You could buy it in the market for 900,000. Why would you go buy it for $1 million? It just doesn't make sense. Same with the stock. If you have the right to buy a stock at say $50, okay, but the stock's trading at 45, well, that's not too good of a right to have. I'd rather not have the right and go buy it at 45 at the market value, right? You're overpaying. So you're not going to exercise and you will let the contract expire worthless, negative 10K. All right. Not a great scenario to be in. Okay. 3 is highlighted. This is where we want to spend most of our time. This is where we aim to be when we're trading. Okay. After 3 months, the house has gone up already. We're 3 months in, the house is already at $1 million. Okay. From 900,000. That 10K premium you bought is now worth 30,000. You've tripled your money. Okay. So now you sell it to another investor and you take the profit between what you sold it for and what you bought it for. You're walking away with $20,000 profit. Okay. That is that is what we're after. I'm not looking to buy 100 shares of Apple. I'm not looking to buy 100 shares of Amazon. I am looking to make my option trade as the stock goes up. Before the expiration, I want to sell that option for a profit to another trader, offload it to someone else. It doesn't matter who, right? Just get rid of it, take your profit, and then repeat this. Rinse and repeat, rinse and repeat. Now, occasionally, guys, we have a scenario like this, okay? After 9 months, the house has not moved at all, okay? And it's time to cut the loss while there is still some loss to cut, okay? So you sell it to another trader for $5,000, you lose $5,000, move on, okay? Because you realize that, hey, yeah, there's three months left, but this is not going anywhere, right? And there's a saying, guys, it's fine to be wrong. It is not fine to stay wrong. Everybody makes mistakes, okay? Identify it, swallow it, and just move on, okay? If you sit there and you're like, I'm right. Before you know it, in option trading, you're gonna be sitting on zero, okay? Because option trading is not about being right or wrong. It is just about being quick with your decision-making. So here, guys, we occasionally deal with this. Let's say I buy Apple calls, meaning I want the stock to go up. Well, the stock goes sideways, maybe even down a little bit. I say, you know what I was seeing before doesn't really look like it's there anymore. Let me cut this now for a 20% loss before it turns into a 100% loss, right? And that right there, guys, is okay, right? We can make mistakes. It is okay to be wrong. It is not okay to stay wrong, all right? Now, are there any questions on how these play out, guys? You can very easily sub in house with stock, okay? You want the stock to rise from 50 to 60? Okay, 60 is your strike price. Is the stock over 60? Is it worth exercising? Is it below 60? Well, then you can buy it for cheaper in the market. Why would you exercise it? Okay. Are there any questions here? Really quick, guys. I know I said questions at the end, but if you have questions on these topics, we can talk about them here. We'll do a Q&A at the end. Nothing. You guys are good. All good. Awesome, guys. Awesome. Okay. So this is another very important part to option trading that, you know, took me a long time to figure out, is how to navigate strike prices. Okay. So can be confusing. If you look at this whole chart, you might be like, what am I doing? What am I looking at? A lot of numbers. Some of these got negatives. These got some letters in there. What am I looking at? You know, so this can be confusing, guys. Selecting the proper strike price is going to get your option trade off on a good start. Okay, it's not going to make it green. It's not going to save it from being red, but it's at least going to get you off to a good start. Okay, we as traders, myself, that what I teach is looking for what I call a delta sweet spot, which is essentially between 0.3 and 0.5. Okay, for puts, it will be negative, but it's the same thing, 0.3 to 0.5. And we're looking for high volume in high open interest. Okay. Now, for the most part, these strike prices will be at the money. Okay. At the money, guys, is where we have the shift from dark purple to black, meaning right here. Okay. These are in the money. Okay. These are out of the money. And then these are, you know, what we call at the money. Okay. Where a small move in the stock can push these into the money. Okay. And then again, just opposite here. Now, so let me just show you guys quickly what we're looking for. Okay, so on the call side, somebody help me here. Given this, what would we select for calls if we want to trade? If we're bullish the stock, we want to trade calls. What strike price would we select here? Given, okay, at the money, I want a price here, guys. So we got one for 56.5, 56.5, 57. 56.5. Oh, we got some more coming in here. Whoops. A lot of you guys, okay, 57. Okay. So the first thing I want to kind of highlight is that there is, here, let me answer this question first. Why do you like delta between 0.3 and 0.5? So guys, without diving too much into the Greeks, we're going to talk about, like, the Greeks are, you know, a 2-hour conversation almost by themselves, understanding them. That is in our actual course. Remember, this is just kind of free for everybody. Delta is how these, so when you buy one call contract, okay, when the stock moves up $1, how much does your contract move up? That is your delta. Okay. Now with delta, ideally you'd say, well, if the stock goes up $1, I want to make $1. Okay. Then you're going to have to pay a ton of money. Right? Those would be deep in the money. So but if you know, what if the stock moves up $1 and you only make 10 cents? You'd be like, what the hell? The stock moved up, but why am I not making money? The stock moved up. I'm not making any money because your delta is too low. So you want to kind of find that sweet spot between price and getting paid when the stock moves. So right here is where, you know, between 0.3 and 0.5. So if the stock moves up $1, I make 50 cents. It doesn't cost a ton of money to take these trades. And then the last reason why 0.3 to 0.5 is just typically that is where at the money they'll sit. That's where the delta is at the money. And that's where most of the volume comes in. So yes.
Now with stocks like Amazon, Tesla, you know, you could be a little bit aggressive with your strikes you're choosing, but the stocks like DKNG, AMD, if somebody chooses the strike of $60 here, right, and we go sideways, the premiums will get crushed on you. So, yes. So choosing a strike here of is that 56 around of $4 out of the money, you know, or pay from the price itself. Any pullback, any chop, you know, you're red. So I would rather choose a strike that's closer and get, you know, fewer contracts and then choosing a strike of $60 and sizing up on it.
Absolutely. Absolutely. So guys, here, what we're looking for, right, is this 0.3 to 0.5. Okay, now it can be a range. I have to say that for me personally, I would rather be at 0.6 than at 0.2. Me personally, right? It's a little bit safer. Reason being, if the stock moves up $1 and I only make 20 cents, well, what if the stock moves up $1? You're like, 20 cents isn't enough. You don't take your profit, then the stock hammers back the other direction. Versus if the stock moves up $1, you get paid 60 cents. You're like, hey, this is good enough. Let me take it. And you can, the pullback won't hurt you as hard. So what would I select here? Okay, now it's kind of situational. If I want to be more safe, I'm going to go with the 56. I'm already in the money. I have a high delta, meaning the stock moves up $1, I'm going to make 55 cents. Okay, great volume, decent open interest, not the best, but good volume. Okay, and I'm already in the money with good delta. Okay, so that's scenario one. If I want to be a little bit safer. Okay, now scenario two. Let's look at these. Okay, volume, but the 57 is better. Okay, open interest here is also better. So this is a good scenario. Okay. This one also not bad, pretty good volume, a little bit less on the open interest. Okay. So not bad as well. This is where I would probably be choosing. Okay. I would most likely be selecting this. Why? Our delta is right in place, right in the middle, 0.4. Volume is, besides, some of these other ones way out here, really good volume on these, and really good open interest, Okay, so I would be selecting likely between the 58, the 56, and potentially the 57, but for the most part, I would be probably either the 56 if I want to be a little bit more conservative, or the 58. Okay. Yeah, so I'm just reading off the bottom here. Do I look for higher open interest or volume? Okay, they kind of go hand in hand. So open volume is how many contracts are trading that day. Open interest are how many are being held in people's accounts. Okay, so the volume resets every day. Open interest carries over. By the time the first person holds a 56 call in DKNG until this upcoming Friday, those will stay as open interest. Okay, so open interest kind of tells us where are people mostly holding? What are they holding? Why are they holding those? You can kind of start to ask yourself those questions.
And trading on a Monday, guys, and trading on Thursday or Friday is two totally different mindsets. So yeah, I have to know what day you're trading to.
Yeah, the day of trading can be very, very crucial with your trading, guys. Again, has to do with the expiration date. If you only have 1 day till expiration, is it likely the stock is going to go from 56 up to 60? Probably not in that day, right? If it's on Monday, you have 5 days. Hey, there's an opportunity for it to move up to 60. So you can hold it a little bit more on that Monday. So it depends. But here, guys, these are the ones. Now, one little tip I would like to give you. Okay, for the most part, the half contracts suck. Okay, you'll notice if the more you trade, these half contracts suck for whatever reason. Okay, they usually get less volume. Okay, they usually definitely have less open interest. Okay, so this one has a little bit more, but for the most part, guys and girls, you're gonna see the half ones, the 702.5 for Tesla, the 707.5. Avoid those. Do the 700, do the 705, do the 710. Okay. Usually for the most part, guys, I'm not even I'm basically, these are invisible to me at this point. I'm like blind to them. I don't even look for the most part because I just, they just historically do not move as well. Okay. How about for puts, guys? What would we be looking for puts? What would you pick? 55, 55, 55. 55, 50, 55, 54, 58. 58's too deep in the money. 58 is going to be a bit too deep in the money, but yeah, really good. For some reason, somebody is loading up on these. Yeah. So guys, again, the first thing we want to look at, we want to make sure our delta. So where is our delta? Okay. We have, that's our lower end. And, you know, this is more or less our high end. So within these, we want to try to select one that fits with our delta. Okay. The 54s have great volume, a little bit lower on the open interest, but you know, that is okay for right now because the volume is just during the day. The open interest is going to be, you know, it stays open. So a lot of this volume may turn into open interest. And tomorrow this may have more open interest than this. Okay, so we'll see. 54 and 55 both look good to me. If you choose 56 here, you're doing something wrong. Okay, if you're choosing 56 here, the one with the least amount of volume and the least amount of open interest, I would suggest not trading that one, right? If you select 56 and a half or 57, those are not the best to trade, okay? You're gonna have the easiest time getting in and out of trades when there's a lot of volume. So, or open interest, but you know, both. So I would be selecting either the 54 or 55. Now, what one is it? 58, way in the money. You could trade this one if you want. Great volume, great open interest. Now, the only problem is it's going to be more expensive. Okay. It's about 2 to 3x the price of these. Why? Because it's already in the money. Okay. So these are going to be a little bit easier. If you have a larger account and you want that safety of you're already in the money, you're going to make 60 cents for every $1 the stock moves. Yeah. Go trade 58, right? If you have a large account and you feel comfortable doing that, go for it. If you have a smaller account and you need to capitalize and make the most of your money, you can buy twice as many for one of these. Okay, so you can maximize your money more here. Okay, so it's situational. Okay, so let's go take a look at a few. I'll just pull up my option chain. We'll go through a few more. I want to make sure everyone understands this is very, very crucial. We see this in the group all the time, guys. We'll have people say, "Damn, you know, that move didn't pay. I just caught," and I'm like, "What contract doing?" Because you know, let's say one of us were trading them. And we had luck, not luck, but they moved well for us. For the most part, guys, when they're not paying them, is their delta is too low. So the stock moves up $1, their contract moves up 10 cents. Why? Because their delta is only 10 cents. So you can't be asking why when you're voluntarily entering one with such low delta. Okay, so let's go take a look at, you know, let's go look at Tesla. I'm gonna move this back. I think tab is a little easier. And okay. So I think one other thing I want to quickly touch on here, guys, is a lot of you will ask, oh, well, how much volume, how much open interest? There is no answer to that. It's about understanding how much is a lot for Tesla, how much is a little for Tesla, how much is a lot for Amazon, how much is a little for Amazon. That's the good thing about trading options, though, is you understand 5, 10 stocks really well. Okay, so you don't need to you just learn it. You learn how much volume, and also you compare it to the other strike prices for that day, right? So what call contract would I trade for Tesla? What call contract, guys and girls? What would 710 looks good? 720. Yeah, both not wrong. None of those are wrong. Those are good. Those are all good. Okay. You see what I mean about these half ones? You see how these ones kind of suck? Look at the open interest on these. 3 compared to thousands, 400 compared to 2,000. Half ones, they just suck. Nobody, for some reason, I don't make the rules. I just observe this. The halves suck. They all have super, super low open interest. That's always how it is. It's not just one, it's all the time. Yeah, so you have some good options here. If you have a larger account, you know, 710 is good. We have a good delta. We have great volume, good open interest. The 715s, better than these, right? The 715s look pretty good. The 720 also looks good. I probably would not stray too much past that. Okay. Now, This is where people tend to get in trouble, guys, is when they are trading Tesla and they're trading, you know, the 750s, and it's not, for some reason, not updating the delta 710. Yeah, no, I'm not sure why that's doing that. But you know, let's say the 750 here, you can make, you probably say, let's call it 0.16. Okay. So Tesla rips up $1, you're making 16 cents, versus Tesla moves up $1. I just made 50 cents. I made, what is that? 3 times as much, right? For buying the same, we both bought one. I made 3 times as much. Now, you know, so that's kind of when people say, oh, I didn't make any money on that. It's usually you're too far out of the money, right? And there's people will be trading these 800s. Look at 13,000 volume. They have almost no delta. Good question. Is it the same with lower price stocks? I'm not even sure if lower price stocks have it per se. Let me check AMD. I think AMD just goes dollar by dollar as far as I'm concerned.
They have them.
Oh, they do have that.
Yeah.
Yeah, I don't
I think this have both.
Yeah, looks like it. 81.5 has 300 open interest. 80.5 has 300 open interest versus 80 has thousands. Put side looks a little better, but not even here. 82.5. Like, you can just see that this one is dramatically less than these, right? You can just see where it drops off. From this is half. This is half. Why is it half? Half number. This is half number, right? Again, half number here, 86.5, sprinkled in a bunch of these whole numbers. Again, super, super low. What's a recommended account size for Tesla? Yeah, we talk about this in the group a lot. Usually you want to be able to afford to trade a good strike price. If you have to trade the 800 call on Tesla, just make it a goal that, hey, by the end of the month, I want to be able to trade at the money, right? I want, and trade the smaller stocks the right way, build the right habits so that by the time the end of the month, you grow your profits, you have a large enough account, you can trade that. And usually in terms of account size, it all depends on your risk. All depends on your risk. If you have a $5,000 account, you want to make one trade for the day and you're comfortable going all in, I'm not going to tell you not to do it if you're comfortable with it. Is it the smartest way to trade? No, but with a $5,000 account, you kind of have to, you know, make do. I would rather see you trade AMD 3 times for 1,500 each, right? But it's you, and, you know, you make your own decision.
Same here. I agree. You know, or I count with $5,000 trading Tesla. Yeah, you could, you know, risk it, you know, but it's not smart trading, you know.
It definitely doesn't make sense.
Yeah, you know.
I mean, you can make a buck off it. You can make a quick buck, but one thing that I promote in the course, in our group, and webinars every day is habits. Okay, your profits you make today don't matter. The profits you make this week don't matter. The profits you make this month don't matter. What matters is your habits today, your habits this week, your habits this month. Okay, because if you have a shitty month of trading, but your habits are freaking spot on every day, it's only a matter of time. Okay, but if you have a good month of trading and your habits are shit, it's only a matter of time until you blow up.
Absolutely.
Okay? Focus on your habits, guys. And, you know, once you establish good habits, the profit
Consistency.
Yeah.
Consistency. Once you guys get better at consistency and you guys are profitable week by week by week, then your account will grow from 5,000 to 25,000. Then you'll be able to play around with Tesla and Amazon. It's all about just getting there. Don't focus on the money in the short term. Just focus on actually getting better at executing and getting better at your skill sets for trading. That's what's going to help you actually make the money.
Absolutely. Absolutely. Okay, guys, are there any questions on this? All right, I hope thoughts on averaging down options if the price drops. That is a bad habit. Bad habit. Options are not like stock. Options, a lot of people think about, dollar cost average your position down. That is good for investing. Okay, it is true. No matter what happens, the S&P 500 will be higher 10 years from now unless the world gets wiped out. Okay, I don't care who the president is. I don't care what GDP is. I don't care. The stock market will be higher 10 years from now. Now that option, that weekly option, is going to be buried 10 years from now. All All right. So do not average down your red option trades. If you want to average down your investments, sure.
Well, one of the things there too is before you take a trade, you guys have a plan. You know, I'm right here. I'm taking profit here, and here's where I'm wrong, right? And if you happen to the trade, and you're still above where you're wrong, and you see value pushing upwards, right? I would add, you know, if I see volume heading my way, you know, just to get even again, right? But I'm not just going to add just to add, you know? You have to have a plan when you're trading it.
Absolutely. So what premium will you choose for scalping and day trading? The strike price should not really change. The expiration will change. We're about to talk about that. Okay, so that'll be the next slide. Will out of the money hurt on pullbacks? So yes. Okay. Now that is another topic that is too much for us to get into. That's called intrinsic value and extrinsic value. Okay, we cover that in the course. It's very important to understand. But essentially, when you're in the money, you're holding something that already has value. Okay, so let's go back to that house. Okay, the house is, my strike price is $1 million. The house is already at 1,025,000. Okay, I'm $25,000 in the money. Okay, now if my strike price is 1.5 million, well, it doesn't really matter if it's at 1 mil or 1 million point one. I'm still so far out of the money. It's just air. It doesn't even, it has no value, right? So when you're trading out of the money, the closer you get to your expiration, the more these will start to deteriorate, especially on pullbacks. Because every pullback is like, oh shit, we're not getting there. Every pullback is just hitting it more and more, and is like reiterating that, hey, that out of the money contract is not going in the money. Yes. If you have a $1,000 account, we have some very successful traders do very well with small accounts. So yeah, AMD, Apple, DraftKings, CCIV, Skills. Yeah. Oh, you already said Apple. Apple's a good one. I'd have to look through my watch list. There's a
bank.
Yeah, the banks.
Apple, AMD, the DKNG.
Good one, guys, is the index S&P. Okay, SPY is very liquid, has very low implied volatility. It's going to be very good to trade. So if you have $1,000, it's not a NEO, sure, NEO. Okay, so
not Shopify.
Yeah, I don't really focus on having a portfolio when I'm day trading. It's not my investing. I'm not teaching investing. I'm teaching how to day trade. So I don't really focus on holding options for too long, or creating a portfolio of options, or using options to create a delta neutral for the most part. How, guys, just to kind of maybe clear this, I have an account. I have separate accounts. You should have separate accounts. You should have accounts for your day trades. You should have accounts for your long-term option trades. So let's say I want to buy 1 year out Apple calls. I don't want to see that in my day trading account every day, nor do I necessarily want that maybe in my retirement account, or your tax-free, like your tax advantaged accounts. I think in the States you guys have 401 Roth, IRA, shit like that. You don't necessarily maybe want to have an option in that. Maybe you just want to have dividends and stock and all that shit. So I have it set up many different accounts. Okay, I don't really. I try to have my option trading hat on when I'm in that one. I try to think about dividends and long-term stuff when I'm in my investing accounts, and so on and so forth. Yeah, Microsoft is another great one. Microsoft is awesome.
Yeah, April.
Yeah. Okay, guys, so types of option trades. We're going to go another probably 30 minutes here, then we'll do a quick Q&A. And sorry if you hear my puppy. She apparently just woke up. Type of option trades. So we have what is referred to in the trading community as a scalp trade. I don't know where the name comes from, but is what it is. Scalp trade is usually a very quick trade, okay, minutes, and you're capitalizing on a small move in the price, okay, usually based on technical analysis, sometimes based on news, okay. So last week we had news that they're going to potentially increase the capital gains tax, okay. That was a scalp trade for me. I was not saying, okay, let me swing trade or let me day. I was like, hey, there's your news. I'm trying to capitalize on the move in the price in the next few minutes. Jump in. You're usually using your weekly options. Okay. There's no need to buy 6 month out options. Remember, we talked earlier here, guys. What is your term? What is your term here? What is your plan? 3 weeks? When? How? What is your plan for the trade? If my plan is to scalp trade, I'm going to use the weekly options. If I want to day trade, okay, now there's a common misconception that people think getting in and out is day trading. Day trading is typically you're holding for a few hours and you're trying to let the trade play out, okay? So you're trying to let the trend do its thing. The stock broke a key level, or the stock has good news, or the stock has earnings upcoming, or whatever your reasoning is, you're going to stay in it for a few hours and you're going to let it play out and you're going to hold it for the majority of the day. Usually here, I will be using 2 to 4 week expiration, okay? Weekly is going to hurt your contracts if it doesn't go up right away. Anything extra than that, you're just going to be putting too much money at risk in case some sort of negative news happens. You're going to have a lot more capital at risk than there needs to be. So for the most part, day trading, I will be 2 to 4 weeks out in expiration, okay? Swing trading, this is when you are holding a trade from day to day to day, sometimes into weeks. And you know, that's swinging, you're into the next day and then into the next day and into the next day and into the next. That's swing trading. That's where the name comes from. With this, I personally stick to 1 month or longer expiration. Now, I know some people swing weekly contracts, right? And they call them lotto, where they don't really care if they lose it all. I don't often do a lot of this, okay? And I'm just gonna kind of teach what I do. I don't really do a ton of lottos. I hate losing. So even if it's $100, it still pisses me off. So I'd rather not lose the $100. So for me, when I'm swing trading, I have an idea that I want to maybe hold for a few days. Okay. For example, if Amazon did a stock split last week, I would have initiated a swing trade to hold that for another 3-4 weeks. Why? Because I believe that over the next few weeks, you're going to see a strong move up. So I don't really swing trade unless there's a good reason to, unless I have a high conviction that over the next few days or weeks, we're going to see a strong move up. That is when I will swing trade. Now, swing trading is very good for people who are at work. Okay, if you work full time, which a lot of us do, you can't be in and out all the time. So you know, if you're swing trading, but at the same time, the worst thing is if you're trying to swing trade at work, buy yourself some time, okay? Because let's say Amazon does the split and you use weekly options and it goes red the next day for whatever reason, right? You're done. You're going to be done. You're out of your position. Like it's going to go to zero. And then next week it rips. And you're like, damn, I had the right idea. I knew it was going to do this. The market's rigged. I'm never participating again. No, if you'd had more time on your contract, you would be able to hold through those red days. Okay. So swing trading, guys, buy time. Now, last one here is called LEAP. It stands for long-term equity anticipation security. I don't know why it's so wordy, but so essentially what this is a very long-term option contract, okay? 12 months plus, okay? 12 months, sometimes 24, sometimes 36 months, okay? And essentially this is an investment using options. You are not entitled to dividends, okay? But this is an investment using options, okay? Now, the main difference between all of these guys is your holding time and the expiration date you're gonna use, okay? How long does your trade need to happen? Okay. However, whatever your answer is to that, you need to decide, am I day trading? Am I swing trading? Am I investing? What am I doing? Okay. What I recommend rolling forward, I usually don't roll any contracts. I usually will just kind of exit and you know, maybe just wait for a little bit. Like, I don't know, is it technically considered rolling if you're exiting and then waiting like a few hours and then maybe re-entering? I usually don't do it all in one like transaction where I sell the one I'm in and I immediately buy into another, right? If I want to exit, it's usually for a reason. So yeah, in this situation with Amazon, would you roll it forward? Yeah, I think you'd probably want to maybe exit, maybe even wait for the next week, right? So something like that. Guys, I just want to show a quick example of leaps where you want to use them. So you want to wait for leaps for very good opportunities when it would make sense to invest. right? You don't need to be throwing leaps on long-term. Would you invest? Okay, I'm not talking about the dollar cost averaging. I'm talking about you're trying to buy the dip on an investment. Would you be buying, who here is buying the top? Who here is buying the top? Probably not too many, right? How many of us wanted to buy this dip, right? How many of us want to buy these dips? These are places where you can start putting leaps on, and because it doesn't matter what happens. The S&P is going to go higher the next year or two, right? So you get a good dip like this. This is where you want to start looking for some long-term leaps. I think Z has a friend who had turned 50,000 in Apple leaps into over $1 million. That's the power of option, guys, because you own 100 shares times however many contracts you do, but you don't have to put up that much capital, right? That's leverage. So you're allowing yourself to leverage your investments right here without paying any interest rate, right? So that's the very important thing here with leaps. Can be very helpful for your long term. One that I'm looking at is this. A little bit hesitant on this one. I'm not in anything here, but if this thing gets hit down anymore into the low 100s, I will be looking to buy some leaps on this Teladoc, right? This is a business that was doing really well, uptrending very strong from 75 up to 300, sold off really hard. If we get this into the 100 area, this is a company where I think you can make an investment and you can use leaps to leverage your money. One of my best leaps ever was, I had Tesla way before. I had Tesla at 200 before the split. So they did a 5-time split.
Not sure about Tesla, man.
Yeah, I mean, it's
Still
insane.
hurts.
Everyone owned Tesla at some point and sold it. But Uber was one, after they did their IPO, was one that I was able to pick up. I believe it was down here and hold for. This was November. I think I was in about November, and you hold for a few months. Right? I don't care what happens day to day. You hold. So yeah, am I going to go over what I look for in setups? Not necessarily. That is not just for students, but it's just, there's a lot that goes into it. I want to share with you guys. Next, we're going to go into technical analysis. This will help. Okay. Technical analysis helps. Understanding the right contracts to trade helps. What strike price? What expiration date? Am I scalping? Am I day trading? Am I swing trading? What am I doing? All of that matters. Do premiums move slow for leaps? Yeah, it's literally like your investment. Like they move super slow. It's like if the stock took an Adderall. It's like just a little bit faster. It's like, it's not crazy, but it's going to move a little bit faster. Yeah, journaling at the end.
Now for setups, so like I'm looking for setups, guys. Here's what I'm looking for here. I'm looking for a strike to trade, a pattern, price action. Support is where, so all of this stuff here, people from the chat know I'm always talking about price levels, volume, patterns that are showing up, strikes. I'm going to trade, so all of this stuff we're talking about here is stuff we stare at. Yeah. Trends.
Yeah, for the most part, if you want to pen and paper this, write it down. The most part, what we are looking for is a catalyst and then the price action that will validate that catalyst. Okay, so Amazon does well on earnings. Over what level will that price action validate the good news? A lot of traders, they'll see the good news and they'll just buy calls and the stock will drop. They're like, what happened? The news was so good. Yeah, that's bias. You want to have an idea, which is your trade idea, and you want to use your price level to validate it, right? And your EMAs to keep you in the trade, understand the trend. So that is more or less what goes into, in very simple terms, how we will look for trades and what our setups are. Is we like to have a catalyst, and we like to have confirmation from our price levels. Okay, volume increasing is obviously very, very important. Okay, so here's some technical analysis, guys. We're going to go over really quick. Support, resistance. is broken up into two basic areas: critical levels and intraday. Critical levels, as they sound, are going to be very important. The easy way to think of this, guys, you have your highways and you have your side roads. Okay, your critical levels are the ones that are very important. Your side roads, those are intraday levels. You know, not as crucial. Okay, so we're gonna kind of go over these a little bit here. So let me just show you right here. Okay, so they're a little bit overlapping. Let me pull this to the side and let me zoom in. Okay, so here is Facebook. Can I move over a little bit? Here is Facebook, okay? So here are our critical levels, guys. First and foremost, your critical levels will not be found on a minute chart. They will not be found on a 5-minute chart. Your critical levels are found on the daily chart, the weekly chart, the 4-hour chart, and we're looking for major levels, all-time high levels, previous all-time high levels, right? So here with Facebook, this was our previous all-time high, okay? This was a big support down here. This picture kind of cut it off. This was a big support back here. This was also a big resistance back here, okay? So you can kind of see how these levels start to stack up and be very important, okay? Now we have a new all-time high, okay? So this is now a very important support level. This is a very important resistance level, okay? So these are our critical levels. Keep in mind, daily chart, daily chart. That is where you will find your critical levels. Sure, I'll go over my charting really quick. And Z has webinar videos. Intraday, 5-minute chart, okay? This is what we're starting to see intraday, okay? So these might be your pre-market high, your pre-market low. So you mark these pre-market, okay? Whole numbers, always mark your whole numbers, 330. Once we gave up 330, sold off pretty nicely. You know, here was a resistance level, resistance here, you know. Necessarily, guys, I wouldn't necessarily worry about this level. I would more so be worrying about this level back here. Once we broke over this level, we had a strong move up, and you can see we reject here a little bit, then we break up, then we move up, and we reject this next level. The morning level is still validated in the afternoon, okay? Here are, you know, our support levels. These are our intraday levels, okay? So I can go over these really quick, okay? We don't have a ton of time, so I'm just gonna quickly, I'll chart Tesla, okay? So we start on the daily chart, okay? First things first, you know, mark your critical levels, okay? I don't really care to be necessarily pinpoint right at the top. It doesn't matter right now because the stock's not even close to there. So it does not necessarily matter, okay? Very clear that this 750 level is huge from back here, okay? So this is a big daily level. Okay, at that point, you know, and then here is actually becoming a very strong level as well, 770. Okay, you can see bounce here, a lot of bounce, low a day, right here, right back above it. So these are big levels, right? So I'm looking to potentially trade this move down here, or I'm looking to trade this move up here. In between here, very quick moves. In between here, very quick moves because there is a lot of resistance, or there's a lot of consolidation from back here. Right? You can see how many days, these are daily candles, we just chopped around in between these levels, right? We came into this on April 1st, a full month later, we're still in this range, right? The level looks more like a zone.
If you're charting, guys, right? And you have to stare at it a lot, there is no level there. You know, what I do is I bring up the chart and I see, you know, where price holds, you know, so if you have to force it in, it's not there.
Yeah, like right here, like this is a very clear zone, right? You can see the wicks every time we get above. So yeah, you can mark each wick if you want. Typically what I do is I'm a whole number type guy. 3,500, good enough. Like I don't spend, I'm not getting my, you know, pencil and pen out and marking every penny here and there. You know, you can mark the highs of these wicks and whatnot. But yeah, this is a, you know, overall a zone, right? This was stuck in a zone for a very long time between 2,900 and 3,500. And now we're trying to break out here, as we can all see. Regardless of whether you're scalping, day trading, swing trading, if you're swing trading, I would almost not even care about any intraday levels for the most part. If you're if you're swing trading, you should have a strong reason to swing trade. It should not be out of boredom. It should be because there's a catalyst. It should be because the stock is breaking a key level and is going to continue
range
higher. You know, like right here, we're looking for this to push higher. There should be a reason that has nothing to do with intraday.
Higher volume.
If you're swing trading, you know, you shouldn't be getting in for intraday and you shouldn't be getting out based on intraday for the most part, unless some sort of news happens that was not, you know, included in your analysis wanting to enter. Okay, so that is just the basics on technical analysis, guys. Support, resistance, understanding critical levels versus intraday levels. Obviously, we want to prioritize the critical levels. Those are super, 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 super important. Okay, pay attention to those. Technical analysis continue. This was actually from Friday, guys. I had the most amount of FOMO here. I had to get my teeth cleaned on Friday. I'm watching these guys. The whole group was killing this Tesla trade. The whole group killed this Tesla trade. So I can just show you right here. This was the right from where this picture is taken from, but here was the Tesla trade. Here's a bull flag, guys. If you're unfamiliar with bull flags, essentially a bull flag is what we call a continuation pattern. A continuation pattern is how I like to explain this is you are going to run, okay? So you run your first 5 laps of the track. Now you're tired, you need to take a break. You start walking the next 2, catch your breath, and then you run the last 5 laps, okay? That is what the stock does. The stock cannot just go, 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 go. There needs to be a new set of buyers. There's certain buyers that are exhausted. They want to get out. They're like, I've been holding this for so long, let me cash out. There will be new buyers willing to step in, okay? So that's what we see here, strong, 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 strong move. Okay, breather. You know, these are 5-minute candles, so we get a 30, 40-minute breather before we make that next leg up, okay? And then this is what the bull flag looks like, guys, is it's a very strong pole. That's the pole for the flag. Here is your flag, and then here is your move higher, okay? And that is a very helpful pattern that I like to trade, that the group likes to trade. And it typically, you know, it's a continuation play, okay? So you want to analyze who is in control on the way up, okay? Because that's who we're looking to keep control on the way up. You know, it's a continuation of them controlling it. You sprinted 5 laps. I want to see you continue to sprint. And that's what we're looking for. Where do I like to enter? I like to enter on the break of the flag. There's 2 ways you can enter this. You can trade the break of the high being 700 here, or you can trade the break of this downtrend flag, which would put you in around maybe 698. Okay. So it depends on you. Okay. One thing I don't do is I don't try to anticipate the flag breakout. I don't try to get in here or here for the most part. I'll just wait for the actual breakout, because sometimes we will see this go sideways for a while and then this. Okay. So usually it's best. You can get in early here, okay? Or you can wait. It depends.
And I think it too. Like when stocks run throughout the day, right? Like Tesla here, you know, she ran up throughout the day here. A lot of traders traded calls on her and we're still right on her. What happens there is you're not trading a pattern. You're seeing Tesla fly, you hop in blind.
Yeah.
And she then naturally pulls back a bit, you hop out red, and she runs again. So focus on hopping in on a pattern, not a, she's flying. Let me hop in right away.
Yeah. That's why I like to say to the group, guys, you know, buying green candles is not a strategy, right? Short and red candles is not a strategy. You need a little bit more than that. Unfortunately, it's not that easy. You need usually, you know, it may, you'd be like, oh, but Mitch, I bought a green candle here at work. Yeah. You know, it's just not a long-term strategy. You want to be able to identify these types. Again, guys, it comes back to what are we looking for? We're looking to learn and leverage. I need to learn this so I can leverage this trade. Okay. You cannot leverage buying calls on green candles. You cannot do that. That is not a long-term strategy. What would I don't know what the contracts looked here. I was getting my teeth cleaned, unfortunately. I would I would say off the top of my head, 700, 705 or 710. Why? I don't do the half levels. Okay. And I'm pretty sure that the 700s, 705, 710s probably all had a ton of volume. So some questions here. Do I enter before the close of the 5 minute? Yes, I do not wait on closing of candles. You can, if you like. I understand the risks. I understand how to read the tape. Okay. And we're not going to talk about that. We're doing a quick free webinar here. If you guys want to learn more about reading the tape, if you want to learn more about actually how exactly I enter exit trades, that's in our course. Okay. We just kind of want to do this for the community for free, but there's just simply not enough time. Okay. I do not wait for the 5 minute to close. Short answer. Do I avoid 1 minute candle patterns? I think you can. I will occasionally trade them. You just need to know that you're trading a bit of a riskier trade, and you need to have a tight stop loss with it. Okay. So that's just kind of the problem is with the 1 minute chart. It's hard to rely on it. So you mostly want to be, if you're going to trade the 1 minute, you want to be very certain of the trade, or you want to be very comfortable with the stock. So it's like, hey, I trade Tesla 1 minute chart every day, go for it. But if you've never traded the stock before, and now you're trying to rip the 1 minute chart, good luck. Good luck. Yeah, you can definitely ask questions.
Shahab, no, you can, Shahab.
Okay, so that is the bull flag. Okay, there's also something called the bear flag. It's the opposite. Okay, it's when the stock is dropping, it gives a breather and then a continuation down. Okay, so there is, it's the exact opposite, guys. Okay, these are patterns that I would like to say Z kind of patented, that he was the first one who really ever called these out. But super, super helpful is the inverse H and the H. Okay, so the inverse H, well, we can just start with the regular H. Okay, pretend like these are flipped. The regular H is a strong drop in the stock. Okay, a relief bounce, and then a quick drop again. Similar to a bear flag, usually the H works a little bit quicker than the bear flag. Usually bear flag will draw out for 30, 40 minutes. Usually the H is like strong drop, 1 minute bounce, then boom, drops again, or 5 minute bounce. But it usually does not take 30, 40 minutes for that H to happen. Occasionally it does, but these are a trade where very helpful. So you have two options to trade here, guys. This is essentially what it looks like. You can trade the EMA test, okay? Or you can trade the low day break. It really depends on you. For the most part, I would like to kind of trade the EMA test. This is a very big thing that I teach in the course, is trading the EMAs. In short, guys, the EMAs, you want to stay on the right side of the EMA. I'm not talking left and right. I'm talking right and wrong. There's a wrong side of the EMA. There's a right side. You want to stay on the right side of the EMA. The EMA will dictate trend. If you can stay on the right side of the trend, you will have a leg up on many people trading. If all you do is stay on the right side of the trend, you have an advantage. Simple like that, because you're going to be able to cut your losers quick, and you're going to be able to capture some moves that trend really hard. Okay. So this is the H, guys. Essentially, again, it's a continuation pattern. Stocks tank, they get a relief rally, and then they go again for round two. Okay. You have two options. You can enter here. If you know that it's going to H, once you trade for a while, you start to get it. Okay, I know this is about to H. You'll see us say in the group all the time, when there's bad news, you'll trade the way down, and then you say, wait for the H's. And we say this all the time. When there's bad news, wait for the H's. And then it's like clockwork, because the bad news always, even if it's bad news, it'll give you that relief rally. And then that relief rally is not going to be enough to just completely change the direction. Then it's going to fall apart again. So then you can enter here, or you can enter the low here. Okay, two ways. Inverse H, opposite. Good move up, small pullback, again, keeps pushing. Strong move up, small pullback, keeps pushing. The only difference, guys, this and a bull flag, you can see, is this is quicker than a bull flag. A bull flag would be more drawn out into here, right? And then the move higher. Okay, so it's not a huge difference. It's still a continuation pattern, but yeah.
Now, a friend of mine told me that pattern, Kyle, he told me that he showed me the pattern, and here's great for scalping wise, with that quick hit trade, you hop in, take a profit, you cannot be greedy with that pattern.
Absolutely. So you can see why in short, why I talk about the EMA a lot. The EMA is the blue line. Okay, this is the 5 minute. 5 minute.
Rob, 3 minutes and higher.
if you stay on the right side of the EMA, remember, I'm not talking directions, I'm talking right and wrong. If you stay on the right side of that EMA, you have a huge advantage to people who, if all you do is stay disciplined on that one piece, if all you do is say, if I don't care what happens today, I am not getting caught on the wrong side of that EMA. If that's all you do for your entire trading career, you're going to do well, okay? Because you're going to catch a move like this where you can see we don't crack it from literally open. This is 9:30 down here until what, 2 p.m. here. So the stock moved from 660 to 710, right? And that was the first time we closed the 5-minute below it and really gave up the momentum, okay? The EMA is so crucial, guys, so crucial. Thoughts on trade wicks like gaps? Yeah. Okay, Z answered the question. I was reading that like the question. That is the 9 and 21 correct. All right, last piece, 5 minutes left, and then we'll open up some questions. The EMA is, so how the EMA works, how a moving average works is it takes into whatever time you put. So let's say a 9 EM, that was a 9 and a 21. The 9 calculates the last 9 time frame. So if it's a 5-minute chart, it's going to calculate your last your last 9 5-minute candles. Okay. And it gives the EMA versus the SMA. The EMA gives more emphasis on recent price data. Okay. So let's say you have 9 candles included in your EMA. Why is the 9th one being included as much as the first, right? Give that one half as much weighting, give the first one twice as much. So the EMA weights it differently. It prioritizes the newer data. Okay. Now that being said, the EMA works on whatever time frame you want to. Just don't enter on the 1 minute and then start, or don't enter on the 5-minute EMA and then start canceling your trade based on the 1 minute, right? I really like actually the EMA on the daily as well. I think Tesla ripped the daily chart for a long time. It did. I know exactly when this did. Well, you can see the way down, right? Here's our 9 EMA, right? So here's our 9 EMA. How many times have we tested here? 1, 2, 3, 4, many times. And if you stay on the right side of this, you're good. You're good. There was a point back here too, where it just rode it up for like so long. Where was it? It was
Money.
No, it was this move right here, right? Look at this, guys. You stay on the right side of this. If that's all you do in trading is focus on being on the right side of the trend, you're going to do well. What do I think about inflection points, intrinsic value premiums? I do not focus on inflection points. I love using the intrinsic value in premiums. I do not really focus on inflection points. The thing about trading, guys, is there's more information, there's more strategies, there's more indicators than you need. It's about selecting what you like, what works for you. I'm not going to say anything is wrong. It's just using all of them is wrong. That's what I'll say. Using every indicator, using everything is wrong. Find what works for you. And that's what brings me to journaling, guys. Journaling is so important, okay? It is widely known, okay, in this day and age, that data is king, okay? Why is your Instagram free? Because you're the product. Your data is the product, right? Data is what matters, okay? For everything. If you own a restaurant, what dish is serving best? Who is your customer? What time of the day do you do best? Why? You need to collect that information. Trading is not a hobby, guys. It's either a business for you, or it is going to be if you want to make the most of it, treat it like, if you do it on the side of your job, treat it like an actual side hustle, okay? Collect your data. You collect your data every day. You analyze it. You don't need to make changes daily, but weekly. If you have a restaurant, hey, analyze, why did we sell none of this? Why did we not sell one of this entree this week? Why did nobody want that, right? You need to see that at the end of the week and not put it on the menu week 2. If you have a trade that you lost Monday through Friday, you can't do that next week. You can't, right? That's just horrible business. But in trading, who's going to hold you accountable? It's you and nobody else, right? But if you owned a business, if you owned a restaurant, you wouldn't keep that shitty entree on there every day, right? But if you're trading and no one's holding you accountable, you're going to keep taking those stupid trades every day. Why? Right? But for some reason, traders, they just do. I don't know why, right? But they do. They know that it doesn't work, but they'll do it, right? You need to find out what is your edge. What type of trades do you lose money on? Again, think of it like a restaurant. Why do you lose? Why does nobody order that? Who cares? Get rid of it. Who cares why you don't make money on that trade? Just don't even trade it. Okay. What time of day does your business do well? Does your business make money in the morning? Okay. Do you lose money in the afternoon? Okay. So maybe don't open the business in the afternoon. You are better off financially by keeping your business shut in the afternoon. Okay. What customer do you historically do well on? Which one do you do bad with? That's your stock. What stocks do you do really well with? Prioritize them. When those ones are in play, if you have two customers walk into your store and you know one of them is going to spend $1,000, you know the other one you don't even know. That's like trading a stock that you're comfortable with every day versus trading a random stock. Okay. Understand the stocks that you do well with, prioritize them. Okay. The ones you do bad with, let's say somebody comes into your store, they steal every time. They steal money out of your account. Every time I trade, I don't know, CCIV, I lose money. It steals money from my account. Stop letting it do that. Okay. The more data you get, guys, the quicker you can learn what works and cut the shit of what does not work. And you are the only ones who can do this. I cannot journal your trades. You need to hold yourself accountable.
And
okay?
for people who are trading, right?
Yes.
Green or red, have you been trading great? Have you been trading awful? Have you been trading so-so? If you are not journaling, you are not serious about trading. You need to journal your trades. It helps prevent you from taking hundreds of trades, And you think, oh, you know what? I'm not going to take this stupid setup here. I don't want to journal, So it helps you stay focused.
Yeah, it's actually trading is a very actually quick process with a ton of distractions, in my opinion. Learn, okay? But take our course. If you like the way I teach, guys, this is just a snippet of what we teach. But whether it's my course or someone else's, learn, invest in yourself. Okay, spend 3 to 6 months trying to trade. Okay, journal every single day. Figure out what works, what does not work. At the end of the week, tweak it. Try it again. By the end of the 6 weeks, you're gonna have 6 months. You're gonna have a very good idea of where you make money, where you don't, and then that is gonna put you in a place where now you should leverage. Okay, you learn, you try, you make mistakes, you create your edge, and then you leverage. And then from there on, you don't go back to really having to keep going through this process. You just do what works, and you do it with leverage, and that's how you win. So now there are many ways to journal, guys. You can pay for software. I think some of them are, what's one of them called, guys? Like Trader View is one of them, I think.
Trader Sync, Trader View.
Coming out soon.
Yeah, TradeZella.
Yeah, so you can pay for a software. You can use Excel sheets. Or what some guys do is they'll screenshot their trades after they're done, and you can go into it's not Paint, but you can edit a picture. You can screenshot it and you can write, got in here. So do whatever works for you. This was my journal from last year, a year ago, actually, May 1st. Just an example. It was just a snippet that I used that's in our course. I pulled it out I made this a while ago, but what time? You always want to understand time. Put in your time, okay? TIT is time in trade. That for me was important. One of my shitty habits was I was holding losing trades too long. And it wasn't until I journaled it and I was like, okay, these are my 5 losses this week. What do they have in common? You need to try to find that trend. Okay, every one of them I held for the longest. That was my longest trade of the day. Every day I had a losing trade. So I made a fix saying I need to cut every trade, a losing trade quick, because the longer I hold, the more I lose. Okay. Obviously you need to ticker, call put, your quantity. One thing that is very important as well, guys, is going to be understanding your position size. Okay. Don't compare your position size to other people. It does not matter. Your business is not the other person's business. Okay. However, one thing you want to prioritize is consistent position sizing. You want to not overshoot on one trade and undershoot on another. Make sure you stay even keel, okay? Don't try to prioritize too much on one trade and get blown up. Okay. And if the trade up is, if the trade setup is there, don't size down because you're scared. Okay. Keep your position sizing the same and then slowly leverage it. Okay. But this is just my example of journaling. You guys, this is on Excel. Okay. And yeah, there's a ton of ways you can journal.
Yeah.
I use Excel. I do it by hand at the end of the day. I look through my fills, I type it in, and then I check it on Saturdays. I analyze things. What were my stats? How much did I make? What was my win percentage? What trades sucked for me this week? What can I change about them? Stuff like that. What percentage? My stop loss, guys, very simple, is usually for the most part the EMA. Okay. For the most part, I don't really trade off a percentage because you're going to lose a lot more percent on Friday than you lose on Monday. Right. So if you go off percentage, it's kind of a bit of an uphill battle. For the most part, though, guys, the EMA is my stop loss. And this is why, actually, here, I traded these on Thursday. I don't know why this is being so crazy. Sorry, guys, 1 second. For the most part, though, the EMA is my stop loss. I'm going to try to zoom in here. If you guys use IB, it's not the most user-friendly. So give me a break. But the reason why I use the EMA, again, if you stay on the right side of the trend, you're going to do well, right? Strong, as long as this is going up, you're fine. As long as you're not buying this top, right? But again, buying green candles is not part of my strategy. So I don't really deal with buying the top too often. If there's not a setup there, I'm not going to really trade it, right? Here was a great move down on Tesla, which was the previous day. And this, you can see why I like the EMA as my stop loss. Okay, here, even you'd be like, oh, well, you would have stopped out here. Sure, re-enter. Sure, yeah, you could have stopped out here. It's the right thing to do. It's a good habit. That habit is going to keep you in trading for forever, right? But then you re-enter, and that's a better habit to have, right? And you can see the EMA is like, once we got below it in the morning, we stayed really below it. You can call it here once, but we really did not break above it until, 12, 1 o'clock. So EMA is usually my stop loss. I'm not a percentage. I don't cut myself at 10, 15, 20. Yeah. It's really painful to go and revisit red trades. Yeah, honestly, that is good. The closest you can get to your breaking point is that you kind of need to hit a breaking point in trading. You need to hit a point where you're sick of your own shit, whether it's cutting your losers. A lot of people, it's a funny problem to have, but they cut their winners so quick. And it's something that you need to get tired of. You need to start saying, stop cutting these quick. Maybe you hold your losers too long. Maybe you FOMO trade. Maybe you blindly follow other people's trades. Maybe you buy the top too often. Whatever it is, you need to get to a point where you look in the mirror and I'm sick of this. I'm completely sick of this.
And
how do I use that as a stop loss when you enter that trade? I just stay in it until it breaks. Pretty straightforward.
And STEM-wise, guys, with scalping, with day trading, with swinging, they're all separate of plans there, So and knowing what you're doing also there is key. Scalping-wise, if I'm scalping for a Tesla play up, I hop in and it's been 1 minute, 2 minutes, and she's just going sideways, I'm going to hop out. Because the play didn't happen for me. So I hop out. Now, if the day trading, I have the chart, the 5 minute, I follow that up, swing trading, I have the longer time frames there, hourly charts and so on there.
Yeah. What should the take profit be for a beginner? What you should be trying to do is to take profit when you hit your target or close to, because yes, you can start taking profit at 10%, right? Now, the problem with that, as I said, your profits today don't matter. Your profits tomorrow do not matter. Your profits this week do not matter. What matters is your habits. what the habit you create today will be the habit tomorrow and the next week. So I try to emphasize to people, if you enter Tesla under this bear flag, what's your target? 690? Okay, take it off. And then you don't have any FOMO here because you followed your plan, right? So if your target was 690, great, right? There's your trade. I don't necessarily take it out of percentage. If you want an answer, 20%. If you want an answer, do I use a Hull moving average? I do not know what that is. I'm sorry, I'm not sure. In your course, is there any one-on-one time to discuss? Yeah, we have webinars. And honestly, guys, like if anybody wants a one-on-one who's a student or a member of our group, all you have to do is message me because I have plenty of time for you guys. I have a lot of respect for people who pay their hard-earned money to take our course. It's something I'm very passionate about. Hopefully you can hear it when I talk. I love helping people. I love sharing everything I've learned. So yeah, there is no shortage of, whatever you guys need, shoot us a message. We are more than happy to help. Yeah, I'm looking at multiple time frame. No, I look at multiple, but the one thing you want to remind yourself of is kind of what my reasoning is. Your reason for your time frame for entering the trade should be the time frame that you use to exit the trade as well. So if you enter on a 5 minute, don't let the 1 minute screw you over. If you enter on the 5 minute, don't let the 1 hour screw you over, right? Don't start changing it like that. But I will use multiple just to kind of keep an eye out for big moving averages. Maybe, on the daily chart, maybe there's a big moving average on the daily or something like that. So yeah, but I would recommend whatever you enter on the 5 minute, use the 5 minute to exit, right? Follow your plan.
I rarely, guys, stare at the 1 minute chart. I hardly have that up. Probably the first, 3 minutes of the session, I'll have it up. But then I'm on the 2 minute, the 3 minute, or the 5 minute charts typically.
Yes. Do I read level 2? Yes, level 2 is very important. Level 2 essentially is like breaking down. It's like peeling back the layers of the market. So like, the level 2, if you're asking this question, you likely know what it is. But yeah, the level 2 is very important. Okay. Obviously we don't have time to teach it here, but level 2 is very important. There's a time and a place for it. You use the time, the level 2 at key levels to see positioning, right? Essentially what you want to see is positioning between buyers and sellers at key levels. You do not need to watch the level 2 at 1 p.m. on Microsoft for no reason, right? That's not going to help you. But at key levels, yes, you want to see basically what you want to see is an imbalance between buyers and sellers, right? But essentially you're just looking for that the balance, and you want to see one side lose balance and the other, essentially the buyers are a lot stronger than the sellers. That will push the stock up.
Figuring out who's taking control at that moment.
Exactly. Yeah, to be honest, I use a MacBook Pro laptop to trade, but at the same time, I don't run anything else. So I think a big thing depends on like what other systems you have downloaded into your computer. Like I don't use anything except
just get a gaming computer with increased RAM. That's all you really need. You don't need to ball out on a very expensive computer trade. Yeah. Like we said, focus on consistency, then invest in your business later on.
I do not have any. I actually don't know anybody who is. Wait, is Fidelity? Did they buy TOS, or was that someone bought TOS? Didn't they? Charles Schwab, I think, bought TOS.
Yes, Charles Schwab.
Was it? Okay, well, I don't know anything about Fidelity Active Trader Pro. I don't think any of us use that, unfortunately. But YouTube is an amazing resource. And honestly, guys, if you ever have a problem with your broker, call them and make them walk you through it. Make them, right? You pay them, make them walk you through it.
Okay.
The three of you.
I have 2 questions. How many stocks should I be watching per day? I just have a laptop. Even me personally, with all the screens that I have, I mainly put my focus on 2 to 3 stocks that I'm very comfortable with. I understand their personality, and they offer a great opportunity to trade. I just focus on 2 to 3 stocks. Everything else is a distraction.
Yep, 100%. A big part about, I don't even see that question, but a big part about stocks, like setting up your day starts in the pre-market, and it's stock selection, and you want to find something with a catalyst, either a catalyst or breaking a critical level. If Tesla has no catalyst or no critical level, then maybe set some alerts. What just happened there?
That's me, bro.
Oh, Jesus. I thought we got like hacked or some shit. I was like, what the hell? Oh, what is this? Is your,
Yeah, I have some questions here.
oh, questions. Okay. So anyways, trade planning in the pre-market. We do webinars every morning in the pre-market. It's so important, guys. Even if you work, like if you're swing trading, then focus on your one stock that you're swing trading. If you're gonna day trade, I highly suggest you don't jump on at 10 a.m. and start trading random stuff. If you get on at 10, spend 15 minutes understanding what happened all morning and then start trading at 10:15. Don't get on at 10, take your first trade at 10, right? Again, it's like opening your business. You open the restaurant, okay, put the chairs down, get comfortable, make sure you're ready to have people in, make sure you're ready to take a trade, okay? Make sure you understand the news, you understand what's moving, what's going on, where is this S&P 500 at, where are our indexes at, all that shit. It sounds easy, guys. It's just a lot of people overlook it.
Are market internals always important for entering and exiting if there's a big catalyst for stocks that you're trading? So for me personally, I use $ADD, and I just focus on SPY, and I also pay attention to VIX. These are market internals, and if they offer confluence, like if SPY is going up, breaking a key level, and the stock that I'm currently trading is breaking a key level too, that just gives me confidence that the overall market is going to push. And yes, it does give me more confidence when market internals are going in the same direction as the stock that I'm currently trading.
Yeah. Question here, is there a time not to buy options?
Yes.
For the most part, I can probably speak widely for most traders, is midday. Okay. Now the reason is midday volume drops off. A big part of option trading is the stock needs to be moving. What gets the stock moving? Volume. Okay. If we have low volume, the stock is less likely to move. Your option price is going to get hit. Okay. So now I say that usually because certain days, if we go look at Tesla Friday, the volume never cooled down. The volume was insane all day. Right. So the volume was insane all day. You can trade this all day. You can trade this all day. The volume in the morning is just as high as the volume at 1 p.m. for whatever reason, but this is rare, right? So you want to keep an eye on the volume. And when the volume drops, that is your indication to not place more option trades, right?
And don't worry, from 12 to 3 p.m. every day, Z will keep you entertained, I promise.
I sing and everything, guys. Now, all right, so Rob had a question here. 1 to 5 minute charts. I mean, Rob, you should turn off the 1 minute charts. There at the 3 minute and the 15-minute charts more.
I think I saw a question, and it's one that I resonate with, was you buy the high and you lose. You keep buying the high and you lose. The problem, I said this, is it takes a while to understand, but buying green candles, even if it's breaking your level, really, if it's like right here, right? Let's say, because there's a lot of these. If you back this up, if it's going to let me, this red candle right here, that probably felt like a top. And you're like, oh God, I have to get out, right? The problem is there was a million green candles in a row. You just said, screw it, I have to get in, and you get in. Oh, the notepad is showing. Sorry.
That's fine.
Let me continue.
What? Are you sharing, Mitch?
Yeah, I'll share right now, quick.
Right.
Okay, so this looked like a top, right? Tons of green candles.
I'm not sharing yet.
Oh, this shared? No. It says that it's shared.
No. There you go.
There we go. Okay, sorry about that, guys. This would have felt like a top, right? Tons of green candles in a row, volume surging near 10 a.m. That's usually a time for a reversal. Now, the problem is you cannot buy. That is how you buy a top. You buy, there's no plan there. There's no setup. So you need to control yourself, because eventually, I'm sure whoever bought at 690 stopped out very quickly, because this immediately went down 10 points. You cannot really hold that, right?
This
And
is
then
where patterns
yeah,
are huge.
this is, and now the market's rigged and it's bullshit and all that good stuff, right? This is what you want to wait for that red candle, because at this point you know the red candle's coming. It's a matter of when, not if. You get that pullback. Here's your inverse H. There's your trade. Now you at least have a level. And guys, something we haven't really talked about, but a big part of technical analysis is previous resistance will act as a new support. So now you at least have an edge that this 690 resistance is now going to act as a support. And now you have a pretty tight stop loss. What is your stop loss if you buy up here? There is nothing, right? There is no support. So that one way that you can automatically help stop buying the top is wait for a pattern, inverse H, bull flag, something like that. That is what's going to really, really, really help you. Okay. We probably have time for a few more questions here, guys. Unfortunately, this was just 2 hours. Maybe we'll do something like this with some more topics. It's awesome having, at one point, I don't know how many, we had like 150, 160. It's awesome to see everybody join. So I appreciate you all for joining. Okay. Would I wait to get back to the EMA? You may want to try. However, you would have just not had an opportunity here. I would have waited for this inverse H and traded that. Right. So do I wait for a pullback on big? I don't know what TF means. TF level breaks. Do you wait for a big
scale in or go in with size and scale out? I don't scale in. Typically, I head in with my size and I will scale out. I will sell half or 3/4 on that first premium jump. Do you wait for a pullback on big TF level time frame? I will wait for if they trade or scalping, I will wait for the support to hold or the behind to hold.
Yeah, essentially, you don't need to. So the thing with a big pullback is it's all relevant. Like, so here, previous resistance, 690, very clear. And then we created this inverse H. Okay. Immediately after breaking out, we retested it, confirmed it. If you're waiting for more, then that's showing a weak move. If it comes all the way back down to here, that's a weak move where it breaks out and then it tanks all the way back. If it's, as long as it's above the EMA, yes, you're on the right side of the trend, right? But you should not expect anything more than a retest and then a rip, especially when the volume is this high. You should not expect the market to just hand you a $10 pullback. And it's just not really on a move like this. You need to see, okay, 690 resistance is now support. This is where reading the tape comes in handy. You would have seen the imbalance. You would have seen buyers completely overwhelm sellers, and that's a trade that you get to take, right? And then targets with Tesla, again, the best part about trading Tesla is you're going to get at least a $5 move within the first candle, which is about 1%. You're going to get that, so you can take half off and you can hold runners for 700, right? And that's more or less the trade, right? More or less the trade. All right, guys.
Well, my last one here, bro. Really look at when the trade breakout and you're watching a 5-minute chart and price breaks on the 1 minute. Do you wait for the 5-minute candle to close past the critical level, or do you enter on the 1 minute has broken? What I do is, if I see time and sales printing past my arrival, I will take that scalp trade. If they trading something, I will pay for the 5-minute candle to actually close above that little line there.
Yeah. Guys, I think a big thing for everybody here with questions about charting is you should not really rely on the exact chart maybe for entries and exits. Rely more on where our orders printing. Okay, so the bull flag will help you create that trade idea. The inverse H helps you create that trade idea. But what you should be watching here is, okay, clearly Tesla is strong. We see that. Okay, now we don't want to get caught buying the top. We got to wait for a pattern. So here's our inverse H. Now I want to see the bids, which are our buyers, support 690. Now that I see bids support 690, I can take this trade. That's visible on the 1 minute, the 5 minute, whatever time frame you want to look at. That's just visible by reading the orders going through, right? So yeah, your profit targets, that's the good thing about trading the same watch list day after day after day. I know Tesla's good for 5, potentially 10 points. So you can take off 80% of your position, leave some runners for the 700. That's a good thing about option trades. Amazon usually good for 10 points flat. You know, so that's kind of how you determine your profits.
Yep.
Okay, guys, that is it. I got to cut it here. I have to go have some dinner. Okay. If you guys enjoyed this, if you like, you know, our teaching and stuff, please go take a look. Where our next course is next weekend, this upcoming weekend. Okay. It is by far the most affordable course in any social media. But I literally put my heart into it, guys. I love teaching. So I hope to see some of you guys there. If not, good luck trading this week. Good luck trading, investing, all of that stuff, guys. And enjoy a new month.
And journal, guys. You got to journal. Stay green, everybody. Stay green, everybody.
All right, guys.
Go on.
Bye, everybody.